Okay. Um, I still would not buy a call here. We do have the range. So see that orange box. Normally, I would say close the shorts at the bottom of the orange box. But if you left runners on the puts, stay in them. If we lose the orange box, I don't think it's that solid yet. We might go to 555 or lower. So that would be nice. You do have the overnight lows to help you hold. So you should assume that there will be buyers here. If you want to buy a call, you can. I just want you to know that the rallies will be met by sellers inside this candle right now. So we do have short term, very short term resistance inside there. Um, Normally, I would say start trading the range. I don't think we've established the range yet. We do have these guys that are on the defensive. This is a bunch of tickers from the ETFs that are heavy influencers to the SPY. So the opportunity to bounce is there. I don't think it's long enough that I want to buy calls. In fact, my tool is not saying buy calls yet, and I told you to not buy calls here. Watch this large candle that just happened. That's pretty significant. This 30-second candle, look how wide it is. So let's mark the middle of it just for now. We'll call it 30-second mid for 1, just so I'd remember it. It doesn't need to be that large. Oh, that's 216. There we go. Just a visual reference to middle of that one large candle. You can see the low end of it is 556 and change. The high end of it is 557 and change. So it's $1 wide in 30 seconds. Let's mark it for a little bit. I'll look at CELH to go short. You know why? Escargot, Carol, escargot. Let me see. This is, I'm focusing shorter term collection of all the ETFs. Keep your eye on the XLF especially. Let's look at CELH, bottom right hand corner of the screen. Go out to 1 day. Okay, it is shortable, but if you zoom out, you can see there's so much upside that these investors are not worth your time. I don't think I would. And if you decide not to, don't keep going back and saying, I wish I had, I wish I had. Decide and move on. You know? Because I don't want you to hate me. Here's how I would answer it. At the risk of missing out, I would not. Yeah, I know. It's just murky. The upside, it's been so much higher that it could be dangerous. Who knows what they focus on? Somebody might upgrade it. It might get a buyout. It's small enough that it could get like a cooperation with Pizza Hut or something that just gooses it for a couple of days and you're blown out. So this morning, what did I do? I sold some call spreads. Like I said, I would suggest that I prefer selling some call spreads. So I shorted the markets this morning. When I shared the Iron Condor with you, I only took the upper side on the QQQ because I do have a long on the QQQ that I'm balancing, and I would kill that today, win or lose. So my portfolio is green today. It was red yesterday because of my positions, mainly because of Berkshire. I'm not going to celebrate because Berkshire started the day red yesterday and turned into an extreme green situation. So here's my statement on Berkshire. It's going to break necks in the next few weeks. So it's either below 515 or into a new all-time high again in the next few days even. So keep your eye on Berkshire. It matters. I promise you it does, because it is the heaviest weight on the XLF, which is a heavy influencer of the SPY. So it is tied to the market directly, closely enough that it does matter. Okay, so the KRE is warning us. It is close to losing yesterday's low. I'm telling you, the KRE has been a great tell on the XLF, which is a great heavyweight on the SPY. Do not trust this bull. This bull is a dumbass. I promise you. I have never seen weirder situations in Wall Street than now. We already discussed it in the pre open, those of you who came in earlier. Did you know that yesterday JP Morgan deployed their hedge? JP Morgan, the best bank on Wall Street, per Wall Street. Okay. Did you know they, in the same day, they rolled it up? That happened. So just picture it. They deployed 120,000 contracts, 3 legs, 40,000 each. Then they decided, oh, we made a mistake. We want it somewhere else. They rolled it up. So the math on this one, sell the open 40,000, buy the open 40,000 puts, sell the open 40,000 puts. That's the trade. Selling calls, buying a put spread. And then, oh man, no, I need it higher. Reverse everything. So buy the close, sell the close, buy the close, and then sell the open, buy the open, sell the open. So 9 times 40,000 in one day. JP fucking Morgan. Yes, JP Morgan. So if you feel stupid for opening a bad spread, don't feel so bad. JP Morgan did that yesterday. I couldn't believe it. You can see it in the transactions. Anyway, so don't feel stupid. Motto, the lesson for the day. Oh, Coca-Cola. Thank you, sir. I appreciate the money. Anybody in that put from yesterday? What is the percentage? My put is older, so the trade from yesterday. Anyway, the arrow one, bottom right-hand corner, is played out again. Somebody who wants to work for JP Morgan. YouTube world, welcome. In case you don't know what's going on, I'm talking to 300 friends or 260 friends in another platform. But we do this all day, every day. Join us. That arrow has hit twice already. So we came close to filling it yesterday, and maybe we get both today. I'm still holding short on Coca-Cola. I believe it's going to pay us a lot like it did before. They are green 7%. Thank you for that. Okay, that's good. You see why I told you keep your puts if you had them. Now you need to start locking in some profits. This area should have buyers. And earlier I said maybe today we'll get the arrows that we avoided yesterday, and we got one of them, this one. So I'm going to delete that one. And these levels should matter today. Let me move them. Okay, or not. Love-hate relationship with TradingView. So I'm going to delete the arrow. You should know that somewhere in the middle of those two yellow lines we expected yesterday. In case you didn't remember, check this out. I did not plan it that way. So that was a level significant from yesterday we just lost. So that white circle gave us that target yesterday. It should be support. This was the target not met yesterday. Could be an opportunity. I'm going to delete the rest of the stuff. Okay, so now we've transferred. Oh, okay, we can delete that. See that letter R is should be support here today as far as a zone. Short-term comments, of course. All right. Back to close. Why do we watch 30-second charts? Actually, we don't. That'd be crazy. We watch 15-second charts. Why not? We see 4 times as much action as everybody else that watches 1-minute charts. As long as you can control your emotions. And I'm here to remind you that you should. Okay, so these guys are giving up a lot of profits. These guys have not lived up to the expectations. It's not easy. I mean, look at the candles from Apple yesterday. That was insane. Thanks for the warning about the downside. Went on. Okay, nice, Deb. I love it. I love it. So, in case you don't know, here's a comment from the live gang. Just so you know, I'm not BSing you. So earlier I said I would not take the credit put spread personally. I would only deploy the credit call spread, which is a bearish setup because I don't trust the bulls. And that was the right call. If you did only do the credit call spread, don't get fancy. Leave the credit put spread alone. Just call it a win, an easy win. Just don't do the other side. That would be my take. But if you do want it, let me tell you where you can venture into it. Wow. $54.95. They're paying $50. Yep. $54.95 will pay you $50. We are at $55.65. That is being nervous. I mean, it's doable. So what do they have planned? That is scary stuff. Some scary stuff. Let me go to Twitter. If you see me post something on Twitter, can you share it, repost? All right. So if you bought a call, you should know that this letter R is now lower. We can have one here. Anything above that blue line should be difficult. They are selling rallies, so you should put yourself into that mindset. Now, they did approach a support zone. So we're down 1% already. But yesterday's rally was tremendous, and it's about levels at this point. I'm watching one number. Can anybody guess? If I say 5551, 55.51, can anybody guess? I don't watch the AD line anymore. I took it off my screen. You know what I said yesterday, Climber? I said we will go below 200 by a mile. Actually, sorry, we will go below 194 or 195 by a mile on the IWM if they don't break out of 200.64. Oh, way lower than that. Way lower than that. And I mean, like it points down to the 80s. It's a descending wedge that they launched yesterday. So the IWM The KRE is what I'm focusing on right now, mostly the KRE. 55.51, the KRE, which is the regional bank ETF, would trigger a lower low than the lowest low we've seen in years, months. So that would be technically warning the XLF. The XLF number is 48.58, still pretty far from 49.27. But if I'm right about the KRE being the harbinger of, so the KRE needs to bounce hard here, or if it does lose it, then I stay short. I stay biased short like I am. I stay shorting rallies like I am. I still say if you're a bull and you have areas that are challenged, use strength to fix those areas, not to add. And I said I would not add new positions. Don't trust these buy call setups. We are in a sell off mode, and these are 15-second candles. At some point, one of them will work, but this is the opposite of yesterday. So let me give you a reminder. Yesterday, it looked like this, right? They were buying every dip, and you guys would say, don't buy puts, don't buy puts, don't buy puts, because it's not paying. Okay, so now I'm saying don't buy calls unless you see a good setup. There is a potential that we go to 556. If you haven't tried to buy calls yet, you can buy a call. And you must have good stopping power or logic. So here's a simple one. You choose to buy a call. You spend $120 to buy the call. You say, okay, I will get out of my call if I lose, and you choose an amount and you stick to it. You can also use the charts for that. You can say, if I lose 553.8, I'm out. So whichever comes first. But to me, they're proving to me that the rallies are being sold aggressively. So here's a rally sold. Rally is being sold. Rally sold. Rally sold. So I don't have a floor. The rally yesterday was too fast. So the support is scarce. So if I scroll back to yesterday, well, I guess this whole zone is supportive, but look how wide it is. It could be here, it could be 552.6. So inside this zone, there's a buyer. Let me see if I can find you one, like based on fair value gaps and such. So this area is interesting to me, these two candles. So I would say 553.60 zone. So if we put a box here, that is solid. I mean, I guess you can do it that way. Which means if you buy a call, don't stop out inside this box. At least give them credit to get into the box as support. You see what I'm doing? I'm trying to bring it to here to give us a visual for people who are trading today. Good morning. Sell to open, credit call spread 50, buy to open 15. Nice. 60%. Nice work, Luis. High five. If you're on YouTube, there's a bit of a delay. You should know that. If you want to help us out from here, go to the YouTube, just to log in a presence. You can come back here and hang out. Oh, wow. We're Mongo, so active MongoDB. We're long that guy, but way out in time, so it's not super strong alert yet. So descending wedges tend to break out, right? But yesterday's rally was so large that it makes for a very weak structure below. That's why we're falling seemingly like without a floor. You're ready to buy a put on the IWM. I'm not a fan of buying puts for no reason. So the IWM is falling into a low from yesterday. So remember how I said the bounce was great, but only to get back to get off of an extreme low. Okay, so that extreme low now becomes a must-hold level for the S&P, 548, whatever. We're still $5 away from it on the S&P. With the IWM, we're almost there. So I don't want to buy a put into 195. So the next time IWM rallies, then buy the put, or if you want to buy the put now, I would make it a debit put diagonal. So buy the put for whenever, next week, 2 weeks out, sell puts for today and see if you can do that. All right, so if I bought a call here, look how accurate this box was. You see, the biggest bounce was out of this box. We know our stuff, and the candles matter. The concept I used for this box is based around the fair value gap, but not quite the fair value gap. I don't use the tool. I don't auto. I draw them by hand because I use multiple time frames. And look how accurate it was. But I had also circled the white line, the white circle. That's yesterday. This circle was yesterday. Target 1 of 2. So I said it could be support here. These 2 lines were from yesterday. This box was from us going back and looking at the candles. So if you're trading alone, if people are trading alone without these skills, they're competing against us with these skills. So there's no way we would have bought a put in here, right? And we would have condoned a call where they could have bought a put here because they're seeing, oh, it's falling. Let me get on the put. Whoop, or here's your put. We could have sold a put, bought a call with this information. In fact, we did sell a credit put spread, or at least I mentioned one. Yes, exactly. So that doesn't mean that this is a floor. It just means that it was an area significant enough that we would have expected support. The day is already down 1%. And it's not a disaster. It's just the flip side of yesterday's move. You know what was the worst thing about yesterday is the dip before the market opened and the open low. That was out of nowhere and unwarranted. You can thank the Wall Street bigwigs for that. I bet you this was all about them and their cash. And their window frickin' dressing, whatever BS they do there. So Coca-Cola is still the safety trade. That is like as dumb as can be. Thank you for the opportunity to trading that situation. Google is super strong today. Apple is okay. Microsoft is okay. So Ryan, you weren't wrong where you said, I feel tech can do well. Tech is doing better than the rest of the market. So there's some rotation, some out of this, which is the ETFs into tech. This here is the collection of all these tickers. Apple, Microsoft, Alphabet, Amazon, Meta, NVIDIA, and AVGO all in one line. So this is a 1 hour chart. So let's go to 10 minutes. That's tech today. Overnight high, low, high, and right here. So if tech can break out of this area, I'll put a tiny alert. That's just a mini win for today. The S&P might come up to the second R up here. Okay, thanks for the update. Any comments on the YouTube? I don't think so. It's not all about fast trading. Reminder to the new people here. So I'm going to turn off this buy call buy put. It's visually intrusive to me. So because we're here, we're doing it. So here's a statement. If we make a lower low today, if we make a lower low, so 553.5, if we hit this yellow line, we will probably go to 551.50, which is probably where the other circle is. There it is from yesterday. So we're still chasing the same thing on the bearish side. Just lose this area that they held yesterday. So here's the statement. Yesterday, they said, no, nothing here. And then they went, right? They put a floor below this circle, and they went to higher highs and exploded. Let's see if they can repeat performance, right? That was a bear trap yesterday. They made us feel like, oh my gosh, we're falling. And then they recovered, and then we're going to fall again. And they held this zone, and they made a higher high and exploded higher. So the process today would be, if it's the same, don't make another lower low and go like this, do that. That was yesterday's path. I'll put it in green. Show me you can do that. First step, show me you can take out that 30-second mid 4-1 candle, this one. If you weren't here, that was 1 second, 30-second candle, huge doji. That was the stomach. So the letter R and this letter R, that's the whole candle. Show me you can do that before you make a lower low. If you make a lower low, that's a complete change already. Okay. All right, let's see. What kind of questions do you have? Slow questions, CELH short, I would avoid. Just as messy. Messy. UAL, I don't know why it's still on my screen, upper right-hand corner of my other window. UAL and KRE are on the same boat. Couple red ticks and they launch. Oh, who else has the same picture as KRE and is also a leading indicator for risk appetite? Yes, Bitcoin. It too is about to launch a short. About to, which means it's in support, which means you don't start shorting. You just watch. I'll be on mute for a minute. So expect the unexpected. That's a lesson we learned this last month. What tariff announcement? I don't do that. 3% down today? No, I'm not going to play that game. I'll just play the charts in front of me. Screw everything else. Hello. Can I share QQQ levels? Did you read my morning note first to know where I'm starting from? Okay. QQQ levels. 470 is a trigger higher to 475. That's the big picture. The highest point of volume from yesterday is around 463. We're about the middle of those 2 points. The low of today is a 465-ish. There are buyers there. We have resistance just above here and resistance at 468 and change. Tesla, it could be at 276 or 251 today. Take your pick. If you have a strong stomach, the lines are pretty crazy. 259 loss would probably guarantee you 251. 270 would guarantee you an attempt to go to 275, 76. It's about in the middle of those two. I don't know which it does first. I don't know what that means. Oh, self-driving. Yeah. Yeah. I don't know what's going on there with Tesla. So if you have a strong stomach and you have an advantage, go for it. If not, I don't know why you guys are so obsessed with Tesla, especially around today, because you guys are telling me that today might be the day they report on the deliveries, and that's a catalyst, up or down, we don't know. So I honestly tell you, I gave you 2 numbers. I'm going to give you 2 more numbers, okay? 282 and 245. Those are also doable. In fact, those would be normal looking back 30 days. I'm not making this stuff up. That is the 1 standard deviation of the range for 30 days. One second. We're kind of stuck right now. These are 15-second candles. Let's zoom in on them. 15 seconds. A value that matters, 556.2. 556.2. The top of the letter R matters from the candles I'm looking. Another value, keep in mind if you're holding calls, 557.6. 557.6. 556.2, 557.6. They matter. Let's see. Questions? Hit me. We could have there's a setup to go to 558 right now. If they want it, 558.4 even. They can hit that yellow line if they want to. Which would be normal? Trading the range is normal. They have those two numbers to go through that I just mentioned. But be careful if you're short, if you're holding a put. If you want to buy a put, um, do it at least into 557, ideally into the top of the second R. I'm going to change the color of the R's. So I'll make this one red. If we approach the red R, you can try a put because then we would be trading the range. But if they go to 558.6, which is where they're trying to get to, that challenges that. So the short would be with a stop. And for the stop, I want to survive that. So if I was a market maker looking to trap people, what I would do is come up to a breakout point and then break out and fake it. The 55650 zone and the purple line and the little tiny red line should present a tough spot and challenge the technicals that could be pointing to the highs of the day. So I don't think it's an easy path. Let's put it this way. I would not hold a call for it at the risk of missing out on a nice run. If you are holding a call for it, I see why you're doing it. But you should set an amount that will get you out, or set a target that will get you out, like an amount, positive or negative. Like if you say, okay, I'm in it for 50% and you get 50%, don't be greedy. These guys are bouncing hard like their life dependent on it. And the harmonic says, yeah, it's okay. We saw it coming. That's target 1 of 2. Target 2 is a little bit higher. It's that dashed blue line. These are important. That's the collective of the market, basically. And then you have these guys have been solid all day. These are the mega caps. The KRE is bouncing a little. Bitcoin. So we have a system-wide bid right here. Headline. Wow, they're going to do it. That's amazing. Okay, then. That's a redo of yesterday so far. And what yesterday ended up doing, that. So let's see the challenge here and the challenge here. This is an exit zone based on today's range. If you're looking to short, this is where you would try to short with a put and a stop. I sold call spreads on the QQQ, and let me see where they're standing. Just to see the risk appetite in the market, you can kind of see the body language. Oh, I should have sold more. I'm green on my credit call spreads, so I'll leave them on. They're just to balance my book. I do have some credit put spreads as well. So if you bought puts, you should know that the downside is limited. That letter R becomes support. So this giant green candle, I don't like it when they do that. It bothers me. They cut through an area that they should have struggled with great ease. It's almost like at least they didn't gap above it like they've done in the past. That area should have given them a little bit more trouble. Instead, they make the largest candle through the toughest area possible. It's almost like they know and they collect their wits and they go, now. I know it sounds silly, but that's you can explain it that way. Okay, let's zoom out and look at the bigger picture. Sorry about that circle. That circle is for higher time frames. Maybe I should say do it this way. Okay. So these red lines are bigger picture resistance lines. This one is from yesterday, this orange line, and the support zone from also yesterday and the low of yesterday. So we are inside this descending channel that has persisted throughout March. So this is March. Let's take out all the lines. This is March. Really, this slide started mid-February. So you've heard of ABC patterns. You have a stock fall from point A to point B, consolidate for a pretty long time. And if you lose the consolidation, you go down as much as where you came from. So down into low 5,000, high 4,000. Well, what happened yesterday was we did lose it. But today, we're trying to recover it and avoid it. So this is why I said if we, for whatever reason, lose yesterday, the lows from yesterday, we're probably going to go down another 8%, maybe 12 to hit these targets. So that's the big picture. It's very easy to see maybe if I go to 60-minute chart. ABC move. From A to B, you consolidate in a pretty wide zone. C will be at least as big as this one, probably as big as that one. So it's pretty serious stuff what we're fighting for right here. So this here is a cup and handle potential that gives us beep. Okay, so I just put that on. The mega cap is telling me that we're breaking out. Yeah, well, we're breaking out here too. Thanks for the alert. The target of this would be technically as wide as today, so almost $5 of upside, which puts us right at the top of that red box, which is a resistance zone. That is an unfilled area of candles on the way down. We left gaps up there. So it would be going back, closing business, unfinished business. This is the range for today. And this is the range from the overnight, just above that, and the range from yesterday's extreme spike at the close. Getting here and getting through here should be two different things for this group. This one is an easier breakout. They've been down on their luck. They have excellent fundamentals, and they are momentum stocks. So my statement is if the market is rallying on the back of these, I have no issues. But when these cannot find the floor and these are taking off like there's no tomorrow, I do have issues. Like Coca-Cola should not be outperforming NVIDIA in an NVIDIA-based rally. So very tricky markets. Thank God for charts and logic and fundamentals. Okay, let me check on my account. I want to make sure I don't have any zero DTEs. I do, but I have control over them. Okay, here are a bunch of zeros. All right. So XLI, I mentioned being short by owning a put, and I sold a put for this week. I'm staying in that short. The puts I bought are up 50%. They were for June 134. I mentioned them here. That was 8 days ago. 4 days ago, I sold puts for this week. Those puts still carry $85 of premiums. So if the XLI does not fall lower than yesterday, then I will make an extra $80. And $80 is more than a quarter of the price. So it would make my win like 70% just from that alone. Everything else held the same. And I did sell calls to finance that whole thing. So that should be a good win by the end of the year. I may be able to repeat it. Okay, the XLF puts, somebody's asking. Where is it? Am I in them? Yes. They're still green, even after all the XLF outstanding behavior yesterday. Are you seeing Tesla? Okay, so that's target one of Tesla. The actual normal, the typical move is 276.3. XLF up 27%. The put I'm holding is 8 days old for May 50. I may need to roll it. I don't want it to be too young. 45 days is still okay. I'm updating you on trades I mentioned here. TTD, I'm still in it. It's still red, but let them assign me. Sold put to own shares. The XLP, I do not hold puts. I decided to only sell calls, and that's working. I've not changed my mind. We're long. Roblox is doing well today. SPX, I sold some call spreads yesterday. Oh, I did the June 30th call spread. So here's the funny part. So JP Morgan came out with their setup. What did I say? I said, let's go higher. That seems wrong. And they agreed. So they must have somebody in this room. Who here told them? Because we went higher. So they fixed it. Somebody here spilled the beans. 3M, I have a diagonal. Perfect. The diagonal is working. 3M is the same situation as XLI, except the diagonal is iffy. I might be stopped out at maximum gains this week on 3M. I'm also short calls, which is very profitable. So I may close everything on 3M in the next few days. Maybe. KO, I'm still in it. It's a free trade, so I'm not losing money. It's not making money since I said it, but I'm not losing. You see, Berkshire is back to flat. Yesterday, it went from super red to flat to extremely green. It almost triggers a new all-time high yesterday, and it almost did it today. I don't know what the fuck is going on with that stock. I just want to punch somebody. Let me see. On Thinkorswim, it shows almost a new high today. Here are the banks. Let's go to 5 minutes. Yes. Are we serious? I didn't even see that one. 536 yesterday. 536. The all-time high is right there. I believe that is the all-time high. Let me check. 537.60. Yeah. So it's either at 550 or below 519. That would be my guess. Okay. So this squiggly green mark was me saying from here that if they bounce, they have that available to them. And that would be basically replaying what happened yesterday, a deep red situation, go back to flat, and then go to super green. Well, yesterday went from deep red, like super deep red, to green on the S&P and flattish green on the rest. Well, we have erased super deep red. We were down almost 1% minutes ago, and now we are not down 1%. We're flat. We're green on the QQQ. So today the leaders are the QQQ. The only thing that's still down is, nothing, just like 2,000 stocks. Let's go look at the heat map just for sanity, a little visual check. So this is not a green day. By no means, this should be a green day. So the opposite effect is happening today. It is a red day, disguised as a green day because of a few boxes. Well, yesterday was the opposite. It was a not so red day, disguised as an extremely red day because of giant red boxes. So it's only fair that today would be the opposite. I just want us to be aware of it. And if we go to this is not a green day, regardless of what you say. So we're not confused about this price action. So we'll see. We'll see how this battle plays out. Let's put it this way: the Bulls have everything they need. They have momentum, they have talking points, they have the uber bullish mentality that's still there. They have the sentiment that yesterday was incredibly bullish, the price action was bullish, but they still have to deal with all the scars from the day before that and the day before that as well. But you got to respect it. Tesla is deciding to go to 276.3. That's target one. Target two, 282.3. So apparently, maybe they did deliver the reports of deliveries. And it does say what I told you it may say, that all these reports are horsebucky. Yeah. Judging by what I see around me, every other car is a freaking Tesla. All right. Before the market opened, I said the VIX has a bearish setup and it hit two targets. Target 3 is 2148. So maybe the market tops when the VIX hits 2148. If you're just buying calls now, you're not listening to a word I'm saying, because that's what retail traders do out there. They may make money, but that is not the right thing to do. If you think we're going to 563, which is doable, you need to buy the next dip, not buy into the prior fail. So even if you buy a call and you make money, you did it the wrong way and you locked out. You buy the next dip. Which one? It doesn't matter. As long as you're buying the call on red ticks, you get a discount just from that fact alone, let alone distance. So if you get it at 557.50 as it approaches the word 30-second mid 4-1, which is the purple line, red line, you will get the call for a 30% discount, probably more. Okay. Google broke out. Microsoft broke out, buried everything from yesterday. Like yesterday never happened. NVIDIA hasn't. So there's the opportunity. I will say the opportunity and then you evaluate how likely it is. What is the likelihood of NVIDIA going to 110? Because if it does, it goes to 115, 113, 115. And then the S&P is definitely up 1% by then, because it will take all the mega caps with it, including Meta. Meta will be at 600 and 610 in minutes. That's all on the table. I wouldn't do any of this. Show me, don't tell me, as the song goes. Even the Excel posse, the Excel this and that, is no longer red. They go, it's like, oh my God, we're going to die. No, forget about it. We're going to go to the moon. So you cannot trust this market. Bunch of fools. There are a bunch of fools out there. So play the odds and book early, profits and losses. Roll early whenever you get in trouble. Don't overstay your welcome in a thesis. Check yourself. Like, go back and say, okay, what are we doing? What's the behavior? What's the fundamentals? Am I going on emotions or not? Like, people trading Tesla are extremely emotional. There's another syndrome going around here as to hating a stock because of disagreeing with a guy that happens to be in the company. So make sure you're using data, you're using science and not emotions. It's easy to get wrapped up in our emotions here. The possible upside target for the day. Let's double check on that. Well, this was a target that they overdid. I didn't even think they can get there, and they did it and then some. We're building a bearish harmonic. 561, the yellow line on my screen, SPY, is a long-term Fibonacci level that the bulls must retake. Like at the end of the week, if they're below it, I think they're in technical trouble, which means that any upside from here is difficult. I would argue that this should be the high of the day. This zone, the yellow line. So on the SPX, let's see if we can get that number for the SPX. I can short against the high from yesterday. Um, 1 second. This box I just drew is full of fair value gaps, unfinished business from this drop right here. I would not be holding calls here. I would be selling calls and call spreads above this, in or above this box. Maybe one more burst. To trap people. So if I'm long, I would be setting up an exit. If it's a large long, I would leave runners in case you're brave. Because if they do take out the highs from yesterday, whoa. I mean, that's quite the statement. And look at this. Look at this. Are you kidding me? Coca-Cola again, and now Coca-Cola rallying with the market. Now, how dangerous is that? Timing everything to be on the upside. That would be like something phenomenal. Beep. NQ. Okay, so that alert on the NASDAQ, it's making headway against prior fails, and that's because of these guys. Those are NASDAQ-centric stocks, which is what we mentioned before the market opened. But even the XLF is back to the highs of this morning and overnight. So imagine if the NASDAQ continues, and it can continue, it has a lot to make up. Look at Google Go. Um, the XLF has the opportunity to break out as well and make it a huge day. So before the market opened, there were 1,800 puts transacted in the money in the SPX at 5,700 zone. I'll say it again. Before the market opened, there were hundreds and hundreds of puts transacted deep in the money at 5,700 zone. I didn't think it meant anything because they were a freaking mile away. But there we go. Okay. I'm debating like as in like discussing somebody who wants to go long the SPX from here. Um, the question is, am I too aggressive by taking a long here? I said, I don't know. What is the thesis? I'm in the mentality of selling rallies, using rallies to fix problems, not to chase. But if they're momentum chasers, that's fine. I just need to know that they are they have a reason other than because it just feels better. I don't want anybody to take a KO put because that stock is acting irrationally. And yeah, a put on KO with time to, I mean, the conviction is high, but it hasn't played out consistently. Like it gave us profits today and took them right back. You can try it with a stop too. Right. So if you don't have much to work with, how about you just develop skills, practice, fake take. Say, okay, I'm taking 10 contracts. Ah, that's funny. 561 was the fail yesterday, and in case you forgot it, 561 is an extremely significant level. I'm going to take out all the lines to give you a visual of what's going on. This is a 15-minute chart, so we zoomed out in time. Okay, let's talk about this. This is the fail from yesterday. If we take it out today, it's the catalyst. This was the fail from a few days ago. We took it out, and this was a target overshot. This target was overshot. They should have stopped here. So we went from point A to point B and to point C. And now we're trying to recover what we just lost. These two candles should be very difficult to overcome, especially that they have these behind them. I'll repeat. I will repeat. Point A to point B consolidation failed. They went to point C. They overshot. Forget about the zone for now. Assume this was the bottom. We're trying to recover the area from which we fell. So these two candles, that's 561, 564. You can include 566. 561, 566 zone should be extremely difficult. If it is not, this is a rigged market. I'm very convinced it's a rigged market, but they used to hide it a little bit. Now they don't. It's just plain in your face. Screw you, in your face. Don't care who's watching. They cheat. They pick your pockets while you're standing next to them. So you got to know that. But in reality, this zone should be extremely difficult to overcome. So somebody who is slow should not be going long into this zone. Somebody who's a fast trader and trades momentum can. So this is a 1-minute chart. This W in gray is forming a potentially bearish situation. It turns red, then it's bearish. And when it's bearish, it does this. Okay, something like that. If it plays out, it hasn't played out yet. What do I mean? It's still gray. So the rising wedge is not steep enough. The relationships are not correct enough, but it's close enough. It's saying maybe you should be looking out. So all it's saying is what I've been saying. Don't go long into a prior fail. That's all it's saying. Yes, it's a breakout opportunity, but two things you can do with that. You can buy the next dip for this opportunity if you're not long already, or let them pop and buy the next dip after that for this opportunity. Either way, you don't buy it here. If anything, you buy a put with a stop. If you don't want to be a fool, don't buy a put with a stop either. Just wait for the better clues. Short up here. If you're not into that short, I want to caution you that everybody on the planet thinks it's the almighty stock that's going to $600 million. So you should know that you're fighting an uphill battle. Now, I did fight that battle for months and months, and it paid my bills last year. I'm just repeating the process here. It's been more difficult, and my failure is not to have booked more profits along the way. I booked profits, but not enough. You should look at the SPY from a higher time frame. It's just ridiculous. I'll show you. This reaction is absolutely ridiculous. Inconsistent is the ridiculous part. The thesis, which makes you wonder, what kind of an investor do we have? A moron led by JP Morgan, because yesterday they laid down their bet and they moved it in the same day. 120,000 transactions to fix a mistake. You should look at this chart. This is the S&P on Thinkorswim. The ES yesterday, now, this morning, now, minutes apart, hours apart. Look at the SPY. No stopping for anything, like straight up, no hesitation, all the problem areas. Nope, you defy all the rules of gravity and just go straight up to the breakout. Okay, the target of this is $15 higher. So we would be back in the high 70s of this breakout. If somebody wants to go long, please go long. But make sure you're a momentum trader. You're going to make a fortune. It is in the high 70s, 576, 75, 77. I can't wait for this to happen. I get aggravated when they do it this way. This is making me money, by the way, today. I am more long than short for this week. But it pisses me off that they do it this way. Netflix lagging. Okay. And Meta's lagging, and those are leaders, right? So fast, the stocks that are rallying fast are not the right stocks. So I drew this green thing. Never for a second did I think that it had a chance to happen. Okay, the way it happened, this one. And it did. So this one came to fruition. Let me move it this way so if somebody comes in late, they know that this is played out. I'll take this line out. This letter R is still there, but now it's S, this red R. So we can take it out and we will move the circle. On the way down, the circle now becomes an area of support. This did play out, not very accurately, but it was very a good guide. This played out extremely accurately, so I will move this forward. We will use this in the future. These two, okay, we'll leave them there for now. The whole zone is supportive. If you buy a put now, you're doing the right thing. If you're buying a call now on the way down, you're doing the right thing because you think we broke out and we're going to the moon. I don't think we broke out yet. I think this is more of a target than an exit. This is a 113 target on this collection of ETFs from the green M. You want to tell me they're going to go even higher? So the XLF is going to break down and then break out in the same day? Bring it. Bring it. I would be in a put here, not in a call. Let's see if we can price one. 560 put is 150. Expiration today with a stop. So how do you put a stop on that? You say, okay, I spent $150 for one put. If you haven't done this before, please don't load up. These are super fast trades for people with a strong stomach. So the idea is to set an amount that would get you out. So if you lose $30, you're out. Pick a number that's suitable for your risk appetite. It can be a dollar amount. It could be a percentage. It could be a dollar amount. It could be a percentage. And also set a target to get you out with profits. Like if things go well, how would you get out? This is a scary put entry because we're broken out in theory. And this is an extremely fast rising wedge. And look at these guys, they're looking to break out. So we have, who is it? The XLI. And the XLI is making good headway, but it has a problem at 133. So it has a $1.50, $1.40 of free leeway, and then it hits a wall. The XLY is Tesla, so it's doing well. The XLF, wow, I would be surprised. So we'll see what Berkshire does. I'm not short any tech. In fact, I'm long tech today. And this year, actually, we sold naked puts and a bunch of tech, right? Yeah. Beep. Oh, Lord. We just took out the high on the ES. Oh, I can see messages. I haven't been reading. What's up? Okay, so if I don't answer you in 2 minutes, it's not the end of the world, right? You can take a credit call spread, sure. At your own risk, though. These guys are fools. Credit call spread. If I'm starting one now, is that what you're asking? It'll be 5680. 5680. I'm late. I didn't know I was on a time frame when I'm yakking. It's not like I was twiddling my thumbs. I was talking. 2 minutes between you asking your questions and me answering. Okay, so we have a Freaky Friday moment already, by which I mean the SPY right here is above everything. Calls and puts. We buried everything below. We are in outer space. We are above all the calls, the cluster of calls, and we are above all the puts. The XSP almost at the same level. The QQQ at the same level. The IWM not quite, downside pressure from the IWM. We just have another extreme situation, another unreasonable situation where they cannot trade properly. They over whipsaw this way and over whipsaw that way. I get it. If the VIX was higher than this level, but the VIX is not that high. It's an inch above its mathematical average. And the VIX is almost at the target I mentioned like 2 hours ago, 2147 or 2148. We will call that target done. So the VIX is done falling from a harmonic. If I'm long, I'm exiting here. Okay, hodling is back. Everybody's looking for the moon. Straight up moonshot. I will start lining up the bear call spreads. Sentiment is over the top. Can you buy a VIX call? I don't know your reason for buying the call. If you're buying it for defense, maybe. I mean, if you need insurance, you need insurance. It's not dirt cheap. If you're buying it to short the market, no, there are better ways of doing that. So I don't know if you're buying it to short the market. There are better ways of doing that. I took it off because we are in a momentum trade. It gives a lot of false positives. On the way down, it was giving false positives, and on the way up, it is as well. If you want, I can put it on a slower time frame down here and see if it works. 5 minutes. Oh, great. Gotta expand it. We are entering an area where we have had, on the SPX, unfinished business. From here to 5651 is areas of unfinished business in the chart, which tend to be resistance. So by any stretch of the imagination, this here is not an easy entry point without tremendous upside conviction. So if you're looking around and you see reasons on your charts to go long, please follow those. But you should know that you need to set exit strategies that are profitable. The XLF is mind-boggling, and I don't think this is JP Morgan. I don't think this is Berkshire. Like the XLF had a high spike yesterday, weird spike towards the close, with which all the stocks did, to 50.06. I'll probably add some puts to the XLF if we hit that number today. Would I short? I am short MCD, so yes, I would. I don't own puts in McDonald's. I just shorted calls. Okay, so what do I do with that comment? Massive push. Clearly, it was a massive push down this morning, and it's a massive push up now. What do I do with that? So hold calls and go fishing? Come back when? When do I book? A comment like that adds, yes, I mentioned it 30 minutes ago that that's the trigger you should look for. I said, tell me it can be above 110. I tell you it goes to 115, and the market will go up to 2%, maybe 3%. Let's see if we can do it. Let's add comments that don't raise emotions without giving relativity. So massive push, but walking into a target area. If I have calls, book it. If I tell somebody to buy a call, I should tell somebody when to exit that call. If I'm holding calls, I am completely out here. Short-term profits. If you make the call early, you should be able to have confidence to leave money on the table, especially when you can repeat it often. People they just want to ride it until the perfect exit. Okay, there we go. Nice clear entry and nice clear exit. None of that leave runners, leave runners, leave runners, leave runners. This is perfect. Entry, exit. Good job. Thank you for sharing. Um, 562, above 562, they go for that 563 box, the red box. That is also an area of exit because of the SPY having unfinished business up there. So the earlier comment was on the SPX, and that would probably match up. And there's a white line that's coming into view. That is a moving average. In theory, that is also resistance. So I encourage you before you make big decisions on trades, to zoom out, examine your environment. What do I mean? Go through your account and see what kind of stocks you have, what kind of positions you have, and if they're profitable or not. And see if they are like the S&P or the QQQ or the IWM. But find out which ETF is your proxy. And come back and let's talk about the scenarios. Okay? I'm going to do it for the SPX. No, I'm going to do it for the QQQ. I think we already did it for the SPX. Let's do it for the SPX. Okay. So last week, March 27th, disaster, point A to point B. If you heard of Fibonacci, let's pick this one. We had just crossed, we are battling the 61.8. The 61.8 is that thin dotted green line. It is the heaviest, it is a pretty important spot for Fibonacci ratio lovers. So is 38.2. So we are at the upper end of that zone. They call that the golden zone. So we fell from point A to point B. We've recovered half-ish. That's what that says. It is in contention whether I put it here or here. Either way, this is the same area. We have a problem where all this beautiful rally, like out of this world rally yesterday, out of this world, and this rally that is mind-blowing today, almost as impressive today, to get back half the problem that we started last week. Perspective versus perception that we're going to the moon. Some perspective. Let's go to the Qs and get some similar perspective. For the Qs, it's even worse, I think. Anyway, what was this time frame? 5. We'll go to here and go 5. I think this level would be a better Fibonacci pick. 61.8 exactly. The machines look for this stuff. I don't know if they will put the start where I put it, so this area should be a struggle. There's also a little tiny struggle here. That alone doesn't scare me. And this is attractive for somebody who's long, that's a momentum trader. This came too fast, which means it doesn't present a lot of resistance on the way up. But you should know it is a target zone. Once we hit the blue line or higher, this is a battle from October. Once we hit the blue line or higher, it should be extremely difficult to make headway compared to how fast we're rallying right now. So it's one thing to get into this zone of blue, 477 through 479. It's one thing to get there, and it's another to blow past it. Okay, so that is the big picture there. So now we have in our head where we're at. You should know that this is a significant Fibonacci level and the lows from yesterday that date back almost a year. It's been a battle for almost a year. So machines give it a lot of weight. This is all to say, don't make up your mind on whether we're making a new high, all-time high, or this is a bottom. That's noise. Focus on what you're doing with your own money and your own account versus what the price action is doing right now. Because I promise you, Wall Street is extremely confused. That's what I'm doing. Every day, 2-3 times a day, I go through my account. And I see if it's balanced, and it is. I'm long good stuff at great levels. I'm short and less short now than before. Because they all played out. And I'm picking shorts that I wouldn't usually pick. Like, I don't like to buy puts for no reason. And I find myself owning more puts than I've done before. Oh my gosh. So the small caps is looking to break out. I just noticed. A minute ago, last time we checked the heat map, the small caps were red and they're looking to break out. So Climber, they busted that downside target that points to 170 something today, because the IWM made a higher high, or is trying to make a higher high than yesterday. It's like an inch away. Oh my goodness. And that I respect. It's a basket of 2,000 stocks. I don't have any shorts on the IWM. They all paid maximum profits. I've been waiting for a rally to short. So what do? I book profits on longs and shorts. It is April Fool's, yeah. Let's see here. Google, we sold puts. They are green. I would leave them. I wouldn't mind owning that stock. Kava, we sold puts. They're very green, and they're efficient. So they're only requiring me $400 to keep that open. I'll keep that open. I don't have anything better to do with my money. ARM, yesterday we went long. We're making money. We'll leave that on. I'm long also, I believe, Microsoft for us. It's profitable. We'll leave that on. Roblox is working. TTD is the only long that's under pressure, like severe pressure. So we will deal with that, continue to deal with that. I have nothing to do with my account. It's well balanced today, this week so far. So my actions are sit and wait to see what the market wants to give me in the next couple of days. So this morning's note, I put a word continuation. Can you continue doing what you did yesterday? The answer is yes, but after a scare. So if I were to wrap up the day and I send out a note summarizing what happened today, I would say after a small scare with a very weak open, the market showed that they do have continuation after a very strong yesterday. Nevertheless, these past 2 days basically bring us back to erasing half the problems that started on Friday. And that should give everybody a positive statement. We did continue 2 days of strength. And but a reality check, which is what I've been saying for almost a month now. The difference is that we used to say these things, wow, check out, check out, check out. And we used to say, hey, new high. Now we say, wow, check out, check out, check out, only to come back to the problem area. You get it? I said those words 3 weeks ago in the beginning of March when the slide started. And it kept repeating, it kept repeating, it kept repeating. When will we go back to the old bull where we say, holy cow, can you believe what they did? And then look left and say, we just broke out. No, we didn't. We just are still trying to recover half the problem from Friday. Doesn't inspire confidence to load up on calls, is all I'm saying. Credit put spreads on bad days is an easy win. Chasing calls is a big win, but not easy. SPY is free today on Thinkorswim. Oh, Bookmap. Yeah. If you're on Discord, you can watch it all day, every day. S&P, NASDAQ, and small caps. I have 6 windows. The futures and their ETFs. So let's see if they can bring us back down to the yellow line that says bull test 1. That was a resistance test on the way up. So you can imagine that now it becomes the opposite. I went off on a rant, but it wasn't. It's a level check. Are we all in agreement now that we have a better understanding of what levels we're working with? How do you make decisions if you don't have the levels? The blue box, it's somewhere around this 30-second word. Yeah. Let me see if they reached out. My gang from the Skype room I used to hang out with reached out to me yesterday. They still meet. Okay, consolidation zone. Are they going to break out? If they take out another high on the day, we can get to 563, 562.9. Although I wonder why they made a lower low before they did that. I mean, it's not the end of the world, but pretty weird. I'm watching the KRE. I'm watching the VIX after hitting my target almost to the penny. 21.48 was the target. They went to 21.58. Again, I made the comment yesterday that the VIX fell yesterday, right? It had a bad day, but it stayed on top of the highs of Friday's VIX. So let's think about it logically. Friday, one of the worst days in recent history, was very bad. The VIX spiked. Yesterday, it started out really bad, and the VIX spiked even higher to 25 almost. And then yesterday we had the mother of all rallybacks and rallies, rebounds, and the VIX fell fast. But listen to this part: it stayed above Friday's levels. I'll zoom out to double check it, and today it is still above those levels. So let me find that out for you. Right here, I do have a box for the VIX right there. If we go to 5 minutes, 331, that was Monday, right? 328 was Friday. Okay, so this is Friday's levels, the VIX. Monday, we opened gap down, VIX gapped up and had a terrible day and held Friday's levels. And we are still inside and at the highs of Friday's levels. Okay, Ryan. If you guys are following him, you should put stop outs. Like how much lower than here? So you would do something like this. If you're long, you take a long, you buy a call or whatever you do with the long. You say, okay, if I lose X amount, and I would want to profit at least 1-for-1 or 1.5-to-1. So pick your levels. Tricky levels here. I think you cannot use the charts for levels on this one because I would be brave until 559.50 because that would be a normal dip, 559.50. So I guess what I would say is I wouldn't get long until I'm closer to 559.50. So that would not be my long. My long would be like this. But that's a matter of preference, of course. All right, let's see if I can get us some pretty good entry points. And if I do get a bounce to 561.20 and I make money, I'll be out of my long if I did take a long. Yeah, there are no easy signs today. There's a bearish setup that has been brewing on the 5 to 10 minutes that I've already mentioned it. So there is an underlying bearish setup that will bring me this arrow sometime today. Whether from this level or from that level, you pick and choose. So if you're holding puts for that, I'm okay with that. Earlier I said buy a put. It's still not losing money. It's been like 25 minutes. So I would stay in that put. It was the 560 SPY for today. So now we have 561.20 as an important line. Let's see if they take it out. They should be able to if they were really bullish. You want to see stupid price action? Pull up MongoDB, MDB. Just to show you how I need to shut down my PC tonight. I've got a lot of, I haven't shut it down this week, 10 days maybe. Check this out, MongoDB. A fully mature company that, look, first of all, yesterday, look, highs of 177, 171. This morning, 177, 170, 177. You're like, what? What's going on? I'd understand if it was Tesla releasing some numbers. Please tell me the numbers on Tesla. Hey, somebody asked about you yesterday. %2 on the DAX. So there goes my profits from that stupid platform. Let me go check on it. I didn't even try to close my win yesterday. Not that bad. I'll stay in it. The Boeing short, a long time ago, I shared a short on Boeing, collecting almost $100 to sell a call spread for $250 on Boeing. You can close that. $250 is a mile away from here, so I'm not scared about it. You can turn it into a credit put spread, into an iron condor if you believe in Boeing. I don't think it pays enough for me to take that risk. The bearish bets on Berkshire are under fire, but still statistically viable. I forget all the ones I mentioned, but I'm pretty sure the deltas are 16 for the long distance one and 13 for the shorter one. June and December. 13 delta on the sold call is acceptable in my book. 13 delta, 0.13. That means the buyer of that delta, the buyer of that call is at a mathematical disadvantage, statistical disadvantage. So I'm okay with that. You see what I mean with this Berkshire? At least today, the greens are not massive. So yesterday it went from really red to flat to really, really green. Today it went from red to flat-ish green. Flat-ish green. Let's see what they do for the rest of the day. This week we have the jobs. Tomorrow morning we will get ADP, which is a preview of the jobs. I think it's meaningless as a guide to what Friday is going to be. Any shock in the jobs number will probably create downside more so than upside. Like, I honestly don't know, but the rhetoric is that we're firing people in the government left and right. We're closing departments. So there should be a net negative number on the government. And in the past months, last year, the government has been a positive contributor. I'm going to guess 30,000 a month. So if we're getting 70,000 to 120,000 new jobs a month and suddenly the government becomes a negative, so that's a big swing. It'll be losing the 30 positive and going to negatives to whatever that negative number is. So maybe we come out with no new jobs and maybe a negative job number, which then will freak the Fed out and say, we got to do a QE. But now we have to cook the books. We would have to fake the reports on inflation, because how are you going to pass a QE idea when we're still struggling with inflation? But if we do announce a QE, that would be a 100% replay of the 2018 playbook from Trump. 100%. He broke the market with tariff this and tariff that headlines. Christmas, we crashed. By January, I think, Powell said, all right, we'll stop raising rates and cut rates back and start buying bonds. That is a headline worth chasing. Where is the Berkshire ticker in Thinkorswim? BRK /B. Not dot. BRK/B. Is it too early? But the credit call spread from this morning is under fire. Yeah. What number do you have? So I don't assume. 55? 21 delta, I would stay in it. The job openings dropped. Yeah. I've never looked at that report, so I don't know. Is that typical or not? No problem, Malim. These are 15-second candles. What happened? There's like, who's got the remote? Somebody unpause this, please. I don't think there's a separation of power. Who is the other one? The Treasury is... I don't understand that comment. I want to... okay. I want to clarify these yellow arrows in case somebody just came in. Brewing bearish setup on a 5 to 10 minute slower chart. So they don't know they don't think that that's like an immediate thing. Same with that one, those two setups. I don't know if it'll start from here or from a higher perspective. Like right now, they're drawing and potentially inverse cup and handle. So they did a little hump here, and if they do this and they don't make another high, and they trip this will get you started. Okay? That's one way to do it. But you got to see what happens inside this level. It seems so easy for them to make another high. They have this champion group, this champion group. There's hardly anything red anymore. Everything is green. We went from everything red. This was all red. And now everything's green. The only thing is health and technology, whatever the hell that is. XLV, I guess, the XLV is the only drag. So there must be like a Lilly problem or a Pfizer problem or something. Lilly is down. Merck is down. Pfizer is down. They're probably J&J. Is that a Johnson & Johnson infection? Yes, down 5%. Okay, so the XLV is the drag. Other than that, everything else is green. Banks will help the next push. Okay, so the banks have a hard sell at 50.06. You should know that. And as long as we're below that, I would not be long the banks here. But if we clear that 50.06, they can go to 50.5, and that would be a huge, huge upside move for the SPY. They are an extreme mover of the SPY, more so than Apple or Nvidia. In fact, twice as Apple, and it's combined. If you combine Apple and Nvidia's effect, the banks will be that, the XLF. So we just matched the high of the day. 3 pokes with no resistance and no bear in sight. The VIX is in the toilet in the day, and you have 3 cents to break out. The bulls have no excuses from being below 563 right now. None on the SPY. There's absolutely no reason to be below 563. So you see how I said earlier that don't chase the breakout unless you're fast? You should know your speed. That's a very important ingredient of trading fast. If you're trading actively intraday, you can do it by chasing calls and puts, or you can do it by doing the opposite, selling calls and puts to people who are chasing who are not very good. And that is credit spreads. Selling calls and puts throughout the day is extremely efficient, but extremely dangerous for somebody that doesn't know what they're doing, and it requires a large account. Like I can trade selling calls and puts naked in the SPY and the SPX. SPY early in the day, SPX later in the day. It's a lot easier than chasing by buying, but some people find it very easy to be active. Like I personally would not chase a call that short. Like Ryan says, I'm buying here. I personally don't chase a call this short. I want to know that I have a run like this to chase. It's just because if you download your transactions, all said and done, you'll pay thousands a month in fees. And you think you're making money, and then you go download your data and you go, wait a minute, I thought I made $2,000. I only have 500. Yeah, because you paid 1,500 in fees. Can I check Apple? Sure. Apple had a weird spike yesterday to 225.62. So 2 ways you can look at it. One is we're going there because somebody made a fat finger and they want their money back. It was a 1 second tick, 225.62. Now this one is bearish, pointing down to 219, 220. So Apple has the same yellow arrow built in here, but it hasn't played out yet. It just triggered. So up or down with Apple, trend is up. If they don't make a new high, Apple might do this. And whoops, these arrows are ugly. Make them regular thinness and solid. Apple does this and that. I can leave it here. If you're going long Apple, that's fine. But you're already long Apple from being long the SPY and the QQQ, I think. Oh, okay. I misunderstood. Tesla hit target 1. I mentioned it before at the open or before the open. Target 2 is 280, 282. Yeah, short Apple is the trade. Those 2 yellow arrows should come to fruition in the next half hour or hour. That's not why I'm short Apple, because there's a wolf wave that points to 219.5. I'm not short Apple, but that's why I would be shorting Apple, not because they will ditch it. Huh, interesting candle that just clicked. A hollow candle. What the heck is that? All right, let's go to Tradietics and watch for what they think is gamma. Okay, so let's do this and refresh the page. Am I still logged in? I am. That's a miracle. By strike. 561 is the largest magnet, so we're there. No information. SPX. It's a mess on the SPX. 5540. What? Yeah, okay, so we will forget the SPX. I don't think there's much more upside from here. I would not be holding calls. I'm reiterating what I said earlier. On the Qs, mess on the Qs, everything is possible. Inverse head and shoulders setup will get us to that 563. Why do I keep mentioning that? This red bar on top, that's my way of saying looking left, maybe on Friday when we started falling, or Monday, I'm not sure. Looking left, there was a mess of candles that looked unfinished. So maybe we go there to finish them. That is a moving average that is not very telling short term, but it's a sentiment that there should be sellers above here, a higher time frame. The bulls have had all day, all morning to take this out to get to here. And they have nothing standing in the way. They have 6 stocks going to the moon, breakout, underperforming. They have a ton to make up from the losses from the last few days. They have hundreds of tickers just decided to go from super red to super green, and the VIX is in the toilet. So, what are they waiting for? More bears? There are no bears. So, who are you trying to trap? Everybody in this room wants calls. There are no bears. Who are they trying to trap? Can I check ARM? Yes. I went long ARM yesterday. Bearish. Maybe 104.50, maybe 103, maybe 102. If not above 110. Yep. Yep. But that's a 10-minute chart, so it might be on the slow side. So clearly you're not using 100, you're not using today because there aren't any you're using Friday. So anybody following him into that one, it's a swing. It might be overnight. Okay. So if I'm long calls on the QQQ and I decide to short a couple of components of the QQQ, those two things balance each other out. I find it difficult to do it for myself, short term fast, but at least this one lines up in 2 separate time frames. The Qs are acting super fast. The other ones are slower. So they don't completely contradict themselves. If they were both for the same day, I would say that's over trading. But Apple and ARM can play out overnight. The Qs, he's scalping fast. All right, I think we can cut away YouTube. YouTube people, can I go over Tesla? I just looked at the comments. Short-term rates, 3 to 6 months. So short-term rates. So the TLT is exploding today after a scary moment this week, which means yields are falling. So rates are falling. If somebody had an adjustable mortgage rate that adjusts once a year, they're probably going to get adjusted down from last year. I think the market is in the process of pricing in the rate cuts that he put in. Like they took their sweet time to do it. I don't think we are going to get a QE without a disaster scenario in the economy. I'm not an expert, by the way. So, oh yeah, if you're interested, Neve, here you go. Two, I need, okay, so we had three spots, one sign up, one person said they were going to sign up. You can take the extra one. MSDR. Okay, somebody wants to check out MSDR. Hopefully they're still there. I just saw the questions. I'm not a fan of the stock as an investment because I prefer doing crypto directly. I'll show you the levels we had checked. I thought these two were possible. We got both of them basically. And this is just a representation of those. So we bounced from the prior targets, which is normal. So if you are super bullish MSTR, you want to see it at 348, 345, 348. If you get the 350, you can get the 410. But I would not bet on that. You need to see what happens to Bitcoin in the next few days, and Bitcoin is fighting for its life. Today, violent bounce in Bitcoin as well. I forgot to mention that Bitcoin was an inch away from losing its lunch, and then boom, out of nowhere, it bounced. The KRE as well. So 320 should be resistance, 330, 332 stronger resistance, 340 should be a sell with a stop. So if I'm long, I'm exiting on this rally. If I sold puts or put spreads, I'm fine. Let me know you heard. Yes, I'm in it. I'm not closing it. Neve, did you hear me? And the other person, Derek and Guy. No, the hotel is really reasonable. It includes breakfast and lunch. I'm not talking. I'm not on mute. Okay. Don't let the hotel room trip you up. uh, this is a bullish setup. 563, 63.50 should be like this. Don't trade the tariffs like that. If anything, it's a catalyst to go to the moon. Listen to it this way. If you're bracing impact for listen, if you're bracing for impact because of tariffs, once the thing is out of the way, that unleashes the buyers. It's out of the way. They don't give a schmut. Tariffs or no tariffs. We're not that smart. We're morons. We are morons collectively. Just think about what happened in August of last year. The VIX shot up to 65 on something that was scheduled. That's how dumb we are, the collective. Japan, the Bank of Japan scheduled the August correction in March. They said, we are going to be ending the carry trade. And blah, 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 Wall Street, blah, 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 blah. And then it happened in August. And oh my God, where did this come from? March? They told you they're going to exit a QE for after 14 years or whatever, however many years. Yeah, that's where it came from. Yeah, I wouldn't short the markets because of a headline. I cannot do that. What I can do is stay out, let them play the headline, and then trade the action. Why guess the action when you can trade the action knowing which way they went? Okay, so I'll say it differently. How is this different? You guessing tomorrow's open over going to Vegas and laying it all on evens or odds on the roulette table. I'm guessing the outcome of the roulette. I don't know what they're going to say. Are they going to delay it? If they delay the tariffs, the market will be up 2%. Just because we're that stupid. Free drinks too, yeah. Is that still going on? We are that stupid. So don't overthink the tariffs. Just trade the price action, trade the facts, not the headlines. The fact is, Nvidia is oversold and it's inching at to 109.97. If it goes to 110, Nvidia launches itself to 112.2 and 114.9. 112.2 would be a typical target for Nvidia for any day looking back 30 days. 112.2. The S&P will level up unless it takes bids from Coca-Cola. I don't know that. Okay? So who is this? I forgot what this is. Oh, Apple. All right, I want to see the XLF all by itself. Sorry about that. So here's the XLF all by itself. Great. It's recovering Fridays. The XLF did better work than the S&P. The XLF has erased Friday's dip completely. The SPY has not. We're still far. So the XLF itself is outperforming. Banks are outperforming the S&P in general. So kudos. Let's see the XLI. Also, wow, the industrials too. And the XLV, that's a mess. So we'll leave that alone. XLP should be higher. Look at the XLP. Complete breakout mode. That's Coca-Cola and Company. The staples, consumer staples is what that is. XLB, the materials. Strong, like the XLF. So the market recovered Friday. That's what this says. The market has recovered the 2% drop from Friday. What hasn't are the mega caps. That's why mathematically the S&P is not there. Where's the QQQ? The QQQ should be worse than the S&P. It is just as bad. So the QQQ is not the market. It's just 6 or 7 really weak stocks and their collective friends and posse. So the question now is, today we broke out of my orange box really early. Like the minute the time hit, whoop, we broke out. So we, in theory, have the width of today to go up, which is mind-blowing. So we have 553, $6 of upside from 560. So 566 today would be a normal move on the breakout from the morning range for me. So the bears need to bring us down to 560 at least to avoid that. If they cannot bring us down to 560, which is half the, I'll change those colors. Half the green arrow, the bears are going to suffer all day. Don't buy puts. Just either sit in your calls or sell a call spread for the day and not walk away from it. Manage that versus trying to say, okay, we're going to drop from point A to point B. We will drop, but not today. That's what it says. So soon they need to drop. I'm going to delete this because it never played out. But the spot is still there. I'm going to replace it with the line that they've held so far. So this is your line. I usually say must hold. And I'm not going to put an arrow, so not to invite anybody lower. This is the downside target of it. So if you do this, let me rephrase, the bears need to do this to avoid 564 and higher. Otherwise, 563.5 is roughly the midpoint. And you can add $3 on top of it if they want to take it extreme. How do you determine the upside and downside? What, the levels? Just from looking at charts a long time. The concept is the same as if you've heard of Head and Shoulders, they look like this. That's a head and shoulder. Okay, the target of that is this, usually. If we lose the neckline, we go down as much as we try to go up. That's the technical. I have multiple variations of it. Like I would say we go to here first. That's my target. This is the ideal target. So here, that's the same concept. Even though I don't have a head and shoulders, but I can extrapolate using the same logic. And the XL posse broke out. Wow. Wow, wow, wow. Very impressive. The only drag is the XLV, the Johnson & Johnson and Company. Imagine if they were also rallying. There we go, out of the calls on the Qs. So now he's net short the Qs by being short a couple of stocks from the Qs as a swing, in case you're following. I'm still focused on a couple of tickers, the KRE and the XLF. Bitcoin as well to a degree. I want to see leaders. What are they doing? Believe it or not, the mega caps are not the leaders. Today they are, but they haven't been leaders. They've been the drag. We just discussed it. And the IWM did break out. Wow, lucky bastards. So the IWM erased a very nasty potential downside target. As long as they close up here, they've avoided a guaranteed disaster. This morning was on rails, and then they turned it off on a dime. I wonder if our buddies on JP Morgan are going to roll their position again. What dummies. JP Morgan, dummies. Open 40,000 contracts 3 times and then roll them the same day. What are you talking about? Crazy stuff. 561.20 should have a lot of buyers on any dips, on any weakness on the SPY. Very, very short term comment. 561.20. I'm mentioning it that's because it's the first sign of cracks in this momentum rally. So yesterday there were no cracks. They were chug, 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 chug. So far today, extremely impressive, but it's not chug, chug, chug. It's just one giant leap. The rally today doesn't look like yesterday's. It's just one giant straight up travel. So this is the kind of stuff they did yesterday. These little dips and pops. So they bought dips and they popped. Today they kind of like shot straight up like a bullet out of a cannon or a okay. I took 558 0 DTE puts deeply in trouble. Any signs of a potential drop? Okay, so somebody took a put earlier today, 9:45. I don't know what time that is. What time frame? What time zone are you in? What time zone are you in? Hmm. What time zone are you in? What time zone are you in? One more time. Thanks, Laurel. I don't understand. I'm asking the one person who's asked me in private to manage a problem trade. What time zone are you in? What time is it there now? Okay. So if I took a trade 2 hours ago and I bought puts and it didn't work, um, and so first of all, I would ask you, why did you take the put? Remember the reason. If it was specific to that time frame, I would not think about rolling it because you'd be turning a fast trade into something else. And that's the first the answer. But the question I have for you is, where are your stops? So if I'm trading fast, there's no way I'm taking a trade and sleeping on it and hoping for the best and then not come back to it until it becomes a disaster. So the question is, um, if you still want to be short, that's the first question. And if the answer is yes, then you say, okay, what are the odds of me recovering my money? It seems like almost like we want to be at 556 before you recover your money, or 558. So we would need a large drop. Luckily, it's early enough in the day to where you could miraculously have a drop here, but I would caution you deciding to, like you said, roll it to tomorrow. What are you doing that for? Like, what do you know about tomorrow that I don't? Like, I don't know why tomorrow would be bearish. If we bought a put today that didn't work out, it was based on charts from today. I don't know we're going to be bearish tomorrow. I have no idea. So the answer is I would not roll it. I would decide to do something with it today. Now, you can do multiple things. You can wait a few ticks and see. And if you get a big drop, recover some of your problems and call it a day and say, I tried to trade and it didn't work today. Hopefully, it's not large in size. So I'm in the mode of saying, I've got a problem on my hand. My goal is no longer to make money. My goal is to recover um, some of my capital. So I would use dips here to fix my problem. So your question was twofold. Should I roll it? My answer is no, unless you have another reason to go short. And two, what can I do to hedge? It's too late to hedge. The hedge is to have stops. That'd be the hedge. Avoid the whole loss or the large loss. So this is a 5-minute a bearish setup that is unfolding, but in slow mo. And in the meantime, the markets are rallying in fast mo. So it is the worst case scenario for a put holder. The only thing we have going for us is that it's still early in the day. Then a flash drop could get you back your money. So don't roll it, no. And have your finger on the trigger to say, okay, I will not take more than this much pain. Okay? So let's see if I can get you some information from the options. My options say I don't have any negative gamma. And if it is, it's a 550 SPY, which is a mile below here. We're not going down $13. I can tell you that all of the SPY level, the price level, there are not a lot of put buyers, is what I'm saying, which is good for the bears because we can fall. We need to fall. The price is above all the calls. So if we close here, we're going to gap down either tomorrow or overnight or in the next 24 hours. Maybe we should. Now, the crazy action from Friday and Monday could have created the situation where this actually fixes a problem from yesterday or Friday. I don't know. So it could be one crazy day after a crazy day after a crazy day, and all of these crazies negate each other. Logically speaking, every dollar and every minute we're sitting here is wrong based on the options versus the price action. So if I'm short via credit call spread, I can sit in it. If I'm short via bought put, that's difficult. You can sit in it for a little bit longer, but after that, you're going to have to decide to cut your losses or not. What do I mean? If I sold a call spread, even here, and it's in trouble, all I need is this, and I get 100% of my win. Versus if I have a put here, every minute chips away at its life. So even if I get that, it may be too late to save it. Which is why it's easier to win when you're selling things rather than buying things. But you win less, more often, less amount, decent percentage. You won't have more than 100%. That would be physically impossible. I have to tell you, I did not see this reversal today. I didn't see the dip necessary the way it happened. I thought we needed a small dip to establish better footing. The reversal was not right. It was so good that it was not right. Let's see if they're like yesterday now continue the behavior. So let's see if from an hour ago to the rest of the day, are we behaving like yesterday? Because if we are, then we're headed to 566. What do I mean? Um, the moonshot to here was not right. This is okay. This was the weird part. This is what happened yesterday. Buying dips inside of a moderately bullish day. That's what I mean. Okay, so in YouTube, you don't see this stuff. Sorry about that. When I write on my screen, I don't think you do. Let me see. Let me try it out. So one thing happened here. 561. I can't see it. 561.7 became the neckline. So if you want a line, I don't have a horizontal line. If you want another horizontal line, it's right there. It's being drawn automatically by this red thing, but that's just a coincidence. This one, we will make a different color, fatter and choppy and all of that. We'll make it white, fat, and choppy. This is the pivot today. There's no reason why the bulls lose it on a closing basis. Let me explain. There's no reason why the bears lose this white line and not try to recover it right away. Because if they can't recover it, they're probably going to come down and test the yellow line. And maybe they repeat that again. So this is your fate. Listen, Yazan, this one is for you, my friend. Red, blue. This is your salvation, path to salvation. Use this if it comes to fruition. That's a high speculative point to get out of your problem. Okay. First problem, lose the white line. Yeah, those lines don't show up on YouTube. I thought so. All right, let's zoom in. See, this is a tiny head and shoulders. Somebody wanted to know how we calculate the measured move. The tiny head and shoulders measured move would be that green line if they confirm breakdown. I may have misplaced it a little bit, but you get the idea, right? Why is it so accurate? Because it's a self-fulfilling prophecy. Machines are trading, not humans, and machines need math and geometry, and that's why they become self-fulfilling prophecies. In the olden days, you could have argued for it or against it, you know. All right, so they lost the white line, which is okay. Now they need to recover it. A bullish market should have no problems coming back to 562.3, 0.27, but let's go with 0.3. a bullish intent needs to bring it, should have no problems to come back to 562.3. The further you go from that white line, the harder it becomes to come back to it. Oh, snap, there are ads on YouTube. More money, more money. I wonder if they pay us for that and how much. Where's my arrow? It disappeared? No, it got engulfed. Okay, so let's change the colors. Make it white and solid. What is happening? There it is. Okay, so the white arrow played out. You see it? Why am I having so much? So, like, you see it? That was the measured move of that head and shoulders. We can delete it. And we got the squiggly mark. We got the first red squiggly. This one played out. If I move it this way, it played out. So now I would say, let's see if this one plays out. But they haven't lost the next one. So I can delete this red one so not to confuse people. So now the question to somebody looking for more downside is, first of all, they're still buying dips. This is a dip like the other one. You can consider this whole dip earlier, same as this one. If they lose the yellow line is long term. Long term. In fact, you should focus on that number, 561. For me, it's 560.8, but let's go with 561. At the end of the week, you want to be above it. Not today, at the end of the week. XLV, I want you to mention, put an alert on the XLV. Below 143.5, 143.4 XLV becomes a problem for the market. Okay, so now they dropped below the yellow. They hit the pink. Let's see, that green M that just showed up on my screen says they should bounce to 561.60. the white line. Interesting setup. The green M that you see on my screen suggests that they may be able to test the 561 or the white line. Let's see. First challenge for the bulls, real challenge of the day. Well, of the last hour.